What if I told you that the trade you're about to take has already been decided, not predicted, not influenced, decided, before your eyes scan the chart, before your brain processes the pattern, before your finger even moves toward the screen? Thousands of trades have already happened. Profits taken, losses absorbed, opportunities erased, silently. So let me ask you something. Are you really trading the market? Or are you reacting to decisions made by machines you cannot see? Because somewhere, in silent, temperature-controlled data centers, far away from human noise, algorithms are executing trades in fractions of time so small, they don't exist in your reality. And if that's true, then maybe the real question isn't how to win in the market. Maybe it's this: is the era of the human trader already over? Let me tell you a story. A trader sits in front of his screen, charts open, indicators aligned, everything looks perfect. He waits, watches, analyzes, then finally, he enters the trade. For a brief moment, nothing happens. Then suddenly, the price moves, but not in his favor. It spikes against him, hits his stop loss, and then reverses instantly, back to where he thought it would go. He stares at the screen, confused. What just happened? What happened is that he was late. Not seconds late, not even milliseconds. He was late in a world that no longer operates on human time. At the core of every trade lies a limitation you cannot escape. Time. Not the time you measure with clocks, but the biological time of your brain. The delay between seeing, understanding, deciding, acting. On average, human reaction time is around 250 milliseconds. That sounds fast, until you realize that modern trading systems operate in nanoseconds. Millionths of a millisecond. This is not a competition. This is extinction level difference. Imagine entering a race where your opponent doesn't run, he teleports. That is the modern market. But even if, somehow, you could match that speed, you would still face something far more dangerous: your own mind. Because every decision you make is filtered through motion, fear. When the price drops, greed. When it rises, doubt. When uncertainty appears. These are not flaws. They are human survival mechanisms. But in financial markets, they are weaknesses. And they are predictable. When the market drops suddenly, your brain interprets it as danger. Your body releases cortisol. Your thinking narrows. Logic fades. Urgency takes over. You don't act based on analysis. You act based on relief. You close the trade, not because it's right, but because it stops the pain. And by the time you feel safe, the opportunity is already gone. Now compare that to a machine. No fear, no hesitation, no emotional attachment to outcomes. Just data, just probability, just execution. Cold, precise, unstoppable. And this is where everything changed, because markets were not always like this. There was a time when trading floors were loud, chaotic, human. Traders shouted orders, reacted to each other, felt the tension in the room. Decisions were made in seconds, sometimes minutes. There was friction, there was delay, there was opportunity. Then came technology. First, electronic trading, then algorithms. At first, they were assistants. Then, they became decision makers. And in 2010, the illusion shattered. During the flash crash of 2010, nearly $1 trillion vanished from the market. In minutes. No major news. No global event. No human panic. Just machines reacting to each other. Selling. Triggering more selling. Accelerating faster than anyone could understand or stop. And then, just as quickly, it reversed, as if nothing had happened. That was the moment the market revealed its new identity. Not human, not controllable, something else. Today, up to 80% of trading is driven by algorithms, not people. Systems. Systems that scan millions of data points every second. Prices, volume, news, social sentiment, economic signals. They don't think like you. They calculate. They don't ask, what do I feel about this trade? They ask, what is the probability of profit? In the next fraction of a second, Artificial intelligence takes this even further. It doesn't just follow rules. It learns, it adapts, it evolves. It studies years of market behavior, identifies patterns across thousands of variables, and connects things that seem completely unrelated. Oil prices affecting airlines, interest rates shifting currencies, a single headline triggering global reactions. It reads language, understands tone, detects uncertainty. It doesn't just see the market, it understands how the market feels. And because of this, something critical is disappearing: opportunity. Because opportunity exists in delay, in moments where information has not yet been fully processed. But AI removes delay. It closes the gap before you even see it. And yet, you still feel in control. You open your chart, draw your lines, wait for confirmation. But what if your behavior is already mapped? Because the system knows where most traders place stop losses: below support, above resistance. Logical, safe, predictable, and predictable behavior is exploitable. Sometimes the market moves toward those levels, not by accident, but because that's where liquidity exists, where orders are clustered, where reactions are guaranteed. Triggering them creates movement. Amplifying that movement creates profit. You are not just observing the market. You are part of the data, feeding it. At the top of this system are firms like Renaissance Technologies, not traders. Engineers, they don't rely on intuition. They rely on models, mathematics, machine learning, and most importantly, speed. Their systems are placed physically close to exchanges because even microseconds matter. Faster data, faster execution, faster profit, while you are still thinking. And this is not just power, it is imbalance. But here's where things become dangerous, because the same systems that create efficiency also create fragility. When algorithms interact with each other, they form feedback loops. Selling triggers more selling, buying triggers more buying. Volatility feeds itself. And then comes the real risk, the black box. AI systems making decisions that even their creators cannot fully explain. And if multiple systems, trained on similar data, react the same way, at the same time, the market doesn't correct. It cascades, fast, violent, and controllable. So where does that leave you? Is this the end of human traders? Not exactly. But it is the end of how trading used to work. Because the future does not belong to the fastest. It belongs to the most aware. Those who understand the system, instead of fighting it. Those who use AI, instead of competing with it. Those who step back from the noise and focus on what machines still struggle to fully grasp: context, uncertainty, the bigger picture, because the market has changed. And if you're still playing by the old rules, you're not just behind, you're invisible. So now, I want you to answer honestly. When you lose a trade, is it really because of your strategy, or is it because you're playing a game that was never designed for you to win? If this video made you question how the market really works, then you're already ahead of most people. So here's what I want you to do. Comment below. Do you think AI has already taken over trading? Or do humans still have a chance? And if you want to understand how to actually survive and win in this new system, make sure you subscribe, because the next video might change the way you see money forever. One final question. If an algorithm can think faster, react faster, and learn faster than any human ... who do you think will control the future of money? Let me know in the comments. And if you want more deep dives into the hidden systems that shape our world ... subscribe to Van